Hey, it's Bill Gross, the LA probate expert, with this week's real estate update. And what is happening in the real estate market? I continue to see more and more predictions of a real estate market crash, but that's not what I'm experiencing as an active real estate broker in the marketplace. What do I mean by all that? Well, for the last 6 weeks, you've been following me, rates were going up almost a quarter percent per week, rising from 2.75 at the end of last year to about 4%, almost a straight upward projection. And last week, it looked like it might continue to go past that. But for the last week, the market flattened off, and we're about the same spot 4.0. Now, it didn't happen in a vacuum. The Fed stepped in and made some comments and changes, I think, to keep rates where they are for whatever reasons. And I'm not going to say right or wrong, but at the end of the day, the market for mortgage rates is the same this week as it was a week ago. Now, what effect has all this had on the real estate market? Well, so far this year, these dramatic rates have not had tremendous changes. And I'm not sure that it's going to, given the current conditions of the real estate market. For example, there's a report last week 57% of homes are selling within 2 weeks of going on the market. 44% are selling 1 week in the market. And if you look at the statistics, it's just shocking. The average home is on the market for 29 days. That is well below last year's record low, 39 days, well below 2 years ago record low of about 59 days. So we only have a total of houses staying on the market for a total of 29 days as the average time on market. I'm sorry, the median time on market for homes. Now, some homes stay on for a long time because they're poor condition or wrongly priced. This isn't the average, this is the median. But the median home is staying on the market for less than a month nationwide. This means that if you're a buyer, you got to look at a property and half the time be making an offer within that first week. And then some houses, on average, will stay as long as 30 days. So houses are moving very quickly. In order, remember, to have a real estate crash or for prices to go down, you have to have more sellers than buyers. And right now we have record low inventory, which means there are not a lot of sellers. As long as buyers are still making offers, and they are based on these statistics, even at 4% rates, as long as it happens, we can't have a housing crash. It's impossible. Now, one result is 41% of the homes are selling above the list price. 41% are selling above the list price. So again, that's not what a market crash looks like. One of the stories I've heard this week, and I saw several videos on how we're going to have a market crash, is all the home builders bringing new inventory in the market. That's not going to have any impact on the market. How can I say that so confidently? Well, for one thing, we have been trailing the increase of population has been trailing the new home building. I'm sorry, the other way around. New home building has been trailing population growth for over 10 years. We have 10 years of unmet demand of housing stock. That's why the situation is as it is today, with so little inventory and so many buyers looking to buy houses. While our population has grown, still growing about 1%, 2% per year, the housing stock has not kept up. Keep in mind the statistics of the market overall. We sell about 6 million homes a year in resale. We only have 900,000 new homes a year sold. Those 900,000 homes, even if we doubled it, wouldn't make a dent in the inventory. We might get back to where we were in 2019. So it's not likely that even if homes were to increase the new home sales, and that's not happening. New home builders are reporting shortages of lumber and other materials, supply chain issues, sound familiar, which are limiting their ability to produce houses and raising the prices of new homes that are coming to the market. So new homes are not going to double in production. Nobody's predicting that. In fact, most predictions are new housing builds will be at or below last year's rate, again, reducing inventory. So what does all this mean? Rates could go up. They're not yet. Rates could go down. But where we are today, we still have a very active buyer's market looking to buy property. We have plenty of buyers and not enough houses, which normally we call a seller's market. I don't see any market crash. Now, if you tell me we're going to have an economic meltdown, okay, change the story. If we're going to go to war with Russia, I don't know, change the story. But as we sit here today, based on the facts on the ground, there is nothing indicating anything but a great opportunity to buy or sell. So you want to sell a house? Great time to get on the market. Let's make sure we lock in that buyer and get you the best terms possible. You want to buy a home and lock in for 30 years, a payment at 4%. Let's get together, get prepared so we can jump on the house when it comes to the market that you're looking for. As always, my contact info below. I'm Bill Gross, and make this week your best week ever.